Hello guys, welcome to the YouTube channel. So guys, I just want to quickly explain this signal that we took. Sorry, yeah, we hit stop loss the other day, but I just want to quickly explain this one because most people, they just don't know how to trade, right? So now you take profit one and take profit two. Let's come here, right? When I give the signal, the market was roughly here, right? I put this is the stop loss, this is take profit one, this is take profit two, right? So when the market opens, it shot up and came down. I know most of you guys closed and lost money unnecessarily. Don't do that, guys. Everything is calculated. This is 730, right? This is the stop loss, right? Why did I put it there? This is why I put it there, right? Look at yesterday's trend, right? This is yesterday's trend. Market came down, right? So let's extend it. You expect what? Market to retest, right? When market retests, you expect it to retest exactly where it broke out. Exactly where it broke out, which is what? The highest high before the market broke out, right? The highest high, this one, before the market broke out, right? So now, as market, so let me extend that. When market breaks out, what happens? That's where your first take profit one happens because you expect the retest to form what? A possible double top, right? That, that. Here's the possible double top, right? But it did not do that. And then what else? You expect market to break back in, right? So what do? You put take profit two just inside here, right? So what happens? What happens? Then market goes and breaks in, right? As it breaks in, you get you hit your take profit two, right? So that's why what's happening currently is that you're expecting the market to come back in. Sorry, expecting the market to come back in when it breaks in to retest this trend line again and then continue with that original trend. But no, if it did not do that, you can still expect it to do what? To continue shooting up, right? So now, where did I see all these things? Sorry for that. I'm gonna come to the 4 hour, right? Just the 4 hour. Look at the 4 hour, guys. If you draw your trend line, there's your trend line, bottom trend line, there's your upper. Let me do it nicely so that most people can see how this trading thing works, right? So let me put it like this. There's your first trend, there's your second trend. Remember, you use averages. You can't say when drawing trend lines, you don't do this. You don't go here and come here and try to figure the edges. No, right? What you do is, okay, so let me put that one back. It's this one, right? You look at between this one, this one, this one, and this one, right? What do? You look at where, if you start here, which most of them can use, understand? Can you hit? You hit this one, you hit this one, you hit it, but it went outside from the double top, came back in, hit it here, and hit it here again, right? So that breakout, yesterday's breakout, sorry, the one it broke out in the 15-minute chart. Let me do this. Sorry, right? It was a breakout from this trend, right? So you're already breaking out of this trend line, right? Now, if you break out of that trend line, what happens? You expect market to do what? To retest and then shoot up, right? So you're expecting two retests already. You need to, and both retests are confirming what? To the upside. You get what I'm saying? So now, let me zoom it in. Let me do this. Okay, the lines are gonna move away, but yes, let me do this. So as you remember, the trend is here, right? You already had a breakout here, right? But when you put stop loss, you need to put stop loss just before, like, you need to put it here because that's where it's what? It's the possible retesting zone, right? Retesting zone in a sense of what? Market broke out here, right? So when market breaks out there, you expect a drawback and you put your stop loss where? Below your expectations, understand? And then market will shoot up again. But let me zoom it in on the 15-minute chart because it was more visible on the 15-minute chart. Okay, if you come to the 15-minute chart, how do you spot it? You spot it like this. Market was going up. You see all these highs and lows. And then that is that retest on that bigger time frame. Where do you put your stop loss? You put it below, sorry, this is supposed to be 730. Yes. There, right? So where do you put it? You watch what market is doing. Market is doing this, is doing this, is doing this, and then it shoots down. It goes down. You put it below. So let me zoom it out. Yes. You sorry. You do this. Market is going up, going up, going up, forming higher lows, higher highs, and all those things. Then it breaks out. You're going to put your stop loss below this low, right? This higher low. That's where you're gonna put it, because that's where the market is more likely to turn back again, right? That's the possible drawback. If market so if market breaks that, right, and comes, you put your stop loss below, right? If market breaks this area here, if market breaks this area here, that is the same area where the market is retesting on the higher time frame, right? Remember, it went out, it's retesting, then it's gonna go up. This is that area, so you put it below it, because anything below that, it means market is coming back into the trend. Let me put it on the bigger time frame to show you guys what I'm talking about. Most people just don't analyze using their heads, but anyway, there, right? Sorry, there, right? This area, if market breaks this area here, then it might come back into this original trend and then continue going down. But the bias based on breakouts, both breakouts, you're already expecting a retest to the bottom side, expecting a retest on the smaller time frame. Sorry, expecting a retest on the smaller time frame here. So if market is here in the middle and you're expecting a possible, I know today I'm making one of the weirdest videos, but anyway, I need to emphasize this point of stop losses, because people are just cowards, right? You need to expect a drawback, right? So if market is going to come down here and this area is the possible break, it breaks back into the bigger trend, but the market goes down, you put your stop loss right below that, because if it breaks and hits your stop loss, then you can expect that all of this was a fake breakout on the bigger time frame. But because market already broke out here, expecting a retest here, which is the drawback, and you're also expecting a retest again here. Let me do this. You're expecting a retest again here, right? So what happened? Market did the drawback on the bigger time frame, which was a retest, and then went up, right, and retested the area where it broke. That's why you're seeing all these things. That's why you're seeing this, which is an order block. Things just don't happen, guys. There's a reason why things happen. That order block is because that was the retest area of this small trend line. Sorry, let me put it like this. It was a retest of this smaller time frame trend line, right? So you're expecting a retest here, and then what else? Continue maybe down or break in. But because all of this was a retest on the bigger time frame, this you can already see it coming, that when it gets here, it will slow down a little bit, probably from an order block. But because this was a retest on the bigger time frame, you can already expect it on this one. You can expect it to do what? Break in on that trend line, right? So this, sorry for that, this you can already see coming a mile away. As you guys can see, the take profit one was close to it, and take profit two was a break in. And where currently is market is currently, remember, this was happening: breakout, retest, fake, not the fake retest, but a weak retest for this time frame, and break into the market, right? So now it's back into this old trend. It's back into this old trend. Broke in. Now what's happening? You're expecting a continuation like it was doing here. Now you're expecting it to do from here onwards. You understand? So that's how you see it, guys. But I hope it makes sense. If it doesn't, I don't know, guys. But the importance is stop losses. Stop losses are calculated. That's why when you open positions, you open your position here, you expect a drawback, and then when it happens, you open another trade closer to the what? To the to your stop loss. There, as you guys can see, I open another trade, and then the market continue going up. That's exactly what happens, guys. You need to trade using your senses. It's not something that one person can teach you. It's something that you need to develop on your own. You need to work on it. This is how you part of risk management, right? You first open an account positions, knowing very well there's a possibility for a drawback, right? Calculate your stop loss. You expect stop loss to get a drawback to get closer to your stop loss, because market these days, especially when it comes to the week of NFP, the market doesn't at open. It doesn't just shoot up or shoot down. As you guys have seen the past weeks, this was yesterday's action. This was today's action during market open. All of this, it just doesn't shoot up or shoot down immediately. No, it's going to range a little bit because it's NFP. It's a week. There's too much weekly strong fundamentals. But yes, as you guys can see where it is now, market, I can enter again. Understand? I can enter again because I know it's back in the trend. What is it doing? It's continuing the trend, going up. Understand? So I can enter again there, take more positions, go further up with it. Hope this video was not long, but I try to emphasize the point. Okay, if it's long, sorry, but I hope you guys get it. Until next time, cheers, guys.